Blow off top on Thursday, markets get pounded on Friday. What's up, everybody? Bubba's Bottom Line, Todd Bubba Horwitz here with you, and what's going on? Well, I guess we had an amazing market action last week. On Thursday, we saw a what we would call a blow-off top, where price and volume didn't matter. They just kept buying. Nothing got in the way of it. And of course, Friday we had a little bit of news that drove the markets into the toilet. But if we look at it, it was just a crazy, wild trade. And I think that the big tip-off was on Thursday. Volatility was positive, even though the markets had the biggest up day of the year. Volume was the third biggest up day of this volume day of this quarter. Just a lot of crazy action going on. And of course, we had some news on Friday with Flynn, who I guess is going to try to roll over on Donald Trump, which set the markets into a spiral lower. Then they recovered, but the overall action was really crazy and really wild. As you watch the futures just whip up and down the ladder, going down over 300 at one point, coming all the way back. But it started before this, and I think this is something important for you to understand and learn, is that the markets overnight were much lower and rallied all the way back. Everybody's trying to bet on this tax plan, which I think is a mistake. I think it's a sell the news anyway event. But again, you could see something was percolating underneath the market, just the way the markets were trading. Now, you know, the story will be that it was because of what Flynn is going to do. But the real truth is the markets are getting ready anyways. And the markets, as I've said many times, are searching for a reason. With the Fed in limbo and having no clue of what to do next, that creates a minor issue as we watch and look. So that is something that is on investors' mind. When we look at some of the other things that are going on throughout the market, you know, if we go back to Tuesday, when another missile launch from Young did not bother the markets whatsoever. The markets sold off for about 5 minutes before making a huge rally and running to the tops again. So this was telling you that the overall complacency factor in the markets, nobody's concerned. And I think this is where you have to understand how to read the tape and how to read the market, okay? And what we mean by the tape is the way the trades are flowing, the way the market is driving, the footprints that are being left behind. The bad news does not affect the market, at least as of yet. Now, is the Flynn case going to be something that's going to now drive the markets? Maybe. That may be the news event. We'll see how it plays out. But we are in what we would think would be bubble territory. Again, we can talk about it all we want. But at the end of the day, the margin debt in this country, in the United States stock market, is bigger than the entire Taiwanese economy. Okay, let me say that again. There's more margin debt than the entire value of Taiwan. All right, now again, you don't think that's a big deal? Well, that's a big deal. That's a debt problem. Nobody seems to care and want to talk about the debt, but that's going to be a real issue. We can ignore it all we want. We can believe that the Federal Reserve is going to bail us out all we want. At the end of the day, the Fed isn't bailing you out. You're bailing you out because you get to pay the bill for it. So let's not think that everything is, as they say, hunky-dory, okay? Let's not think that the Fed can bail you out. You know, the Fed is printing dollars out of your money, all right? Not their money. It's your money. It's the middle class of money who pay for all these ridiculous events that occur. So when they're borrowing money and they're allowing things to stay in, that's because we get the bill for that. And that's something that is really to take notice of when you think that it's going to be okay. And that's one of the things I don't understand about everybody who talks about how good the Federal Reserve is and what they do for us. Yeah, they've done a lot of good. They destroyed the value of the dollar by 97% since 1913. So if you like that, then that's great. Okay, but the bottom line is this debt is going to be a major problem. The debt today is bigger than the housing bubble. So that should tell you number one. The debt is not as good as the debt that was from the housing bubble. That should be number two. The banks, the big banks, are taking over again, and of course getting crazy as they give out money to just about anybody. Now again, they're buying up loans very much as they did during the bubble. They're going into these tranches and these CDOs and everything else that they can't get enough of them. And I have a friend of mine that is a lender that tells me that he can take any loan he wants because the bank will buy him from him right away for a profit. So these are issues that are starting to show in this market. And if you think that it's not going to be a problem, you're wrong. It's going to be a problem. You cannot continue to produce more debt without satisfying that debt at some point. But the Ponzi scheme in which we live under right now allows them to continue to print, but eventually at some point the printing press has got to break down. And I think this is something that becomes more of a problem that we're not looking into. Now you take that into consideration with the way they talk about the jobs. The jobs stink. Okay, nothing else to say about the jobs. They stink. We're not making as much money. How do I know that? Well, I can tell you this, that Americans are now spending more money than they make. All right. The spending last year was 2.6%. The raise was only 1.6%. So they're overspending. So what they mean? Does that mean they're more confident? I mean, consumer confidence numbers are saying that things are better. But again, look who's doing the surveys. All right. It's not just the survey. The survey isn't nationwide. The survey is like the USDA when they want to get a crop report. They ask about 5 or 6 farmers and say, okay, what's going on? The overall picture is very simple. Okay. We are not getting the growth we need. Okay. We're not getting anything that is showing us a dramatic improvement in the economy. Yes, certain people, certain sectors, certain areas are doing very well. If you're a coder and you're looking for a job, you'll get a great job. Okay. But if you're a normal person that is, in the 45 to 65 range that doesn't have a big education, you're going to struggle. And this is the problem, that we still have to spend money. And of course, we keep having the Fed talk about this inflation that they want to drive up. But inflation should be done through natural causes, through supply and demand, not through somebody who's dreaming about getting this inflation built up. So at the end of the day, you've got a big mess. Yes, the stock market's up and great. Again, I'm not unhappy about it. But I am unhappy with the way it's up, and I'm more unhappy for the damage it's going to do for the people that are pouring in their hard-earned money that are never going to get out of it, okay? That are going to end up losing just about everything once again. And I think that is the bigger problem that we never talk about, which goes back to the debt that we create and ignore. All right? You can't just do this. As we watch the things happening, you've got a market that isn't a bubble. I don't care. You can listen to them say, well, but in 99, we had a 90% PE ratio. Now it's only 20. But it's only 20 because interest rates are almost zero. It's only 20 because of their cockeyed metrics that they're using. It's only 20 because they're buying and buying back all their stock. There's a lot of reasons for it. And you can make the argument on either side of the equation. And I'm not telling you to sell the market here. I'm just telling you that the issues that are out here, the problems that are being created, are not going to go away just because everybody says it is. All right. The other day I heard about housing and the mortgage rates, and that, the median house is going up. Well, you know why the median house is going up, don't you? Because low interest rates provide higher prices. It's not a true free market system. That's the whole key here. And we get caught up in these numbers and these things that are going on that don't mean anything. All right? That's the big story here to worry about, not about anything else. All right? You have to wonder about the political environment right now, which that's going to be in my commentary. But look at what's going on with the tax plan. All right? They can't even get together on the tax plan. And I'm not. I mean, reminds me of the comedian, Jackie Mason. It may be, I'm not sure, who knows. In the meantime, we need to get a good tax plan. Not settle for this garbage that they're trying to peddle off on us that is a good tax plan, because it's not. All right, it penalizes small business. Yes, they're getting a reduction from what they're paying today, but their big business competitor is still going to pay less. Their big business competitor is going to be better off than they are. So you want to get a tax plan that brings back competition. Look what's happened to the tech stocks this week. Look at Amazon. On Monday night on my call, I said that would be a great spot to sell Amazon, about 1,200. It's down to around 1,150. Look what's going on across a lot of these tech stocks. They're now getting pounded. Facebook, Apple. All right. Again, why? Because, again, the system is failing based on the debt structure that we have. And we cannot continue to ignore these things, because at the end, what you end up with is a big pile of nothing. All right. And of course, if you look into the farming communities, what do you got? You got grains at prices we haven't seen basically since the 90s. Okay? I mean, are you kidding me? We need inflation. Yeah, they need inflation so they can actually make a living, to go out and borrow all that money to put themselves to work. I mean, corn, if you take out the ethanol value of corn, we're at cheaper prices than we were in the mid-90s. Right? Again, you may not think that's a big deal. It's a big deal to your farmers because they can't make enough money to cover their cost. So that has to be something that we have to look at. Now, again, we happen to like grains here and our buyers, right? So we like corn and wheat. We're not so sure about soybeans. Right? And if we look at the livestock markets, they pumped them up, and now they're starting to fall a bit. Why? Because, again, are we really seeing that much more demand out there, or was it a market that was fueled artificially? And that's one of the things you always have to look at here is what is driving the market. Now, again, it doesn't mean you get out. It means you learn to read the footprint of what's going to happen next, because that will give you a much better clue to how the market's going to operate. So again, I think that when you look at it, you've got a problem. And one of the big problems we see across the Midwest and for the American farmers is the banking system. The banking system does not help the American farmer. It becomes more of a detriment. I said to somebody the other day, I think corn's going a lot higher, and it was trading about 345 or 346, whatever it was trading. And it's not higher today, but that's not the point. The point is, my banker doesn't think so. Well, because the bankers are afraid to give the loans because of all the regulations that they still have and because of the competition with the big bank. We need to bring back the small community banks. We need to be back to handshake banks, the guys who look you in the eye, not the ones who just look there with paperwork, with a bunch of kids that just got out that are only going by the letter of the law. That's what we're missing now in the economy. We're missing the handshake deals. We're missing the ways that we used to do things where you could actually make a deal and that there would be a form of trust based on what you owned. And there wouldn't be somebody tapping you on the shoulder all the time telling you had to get out. So those are some of the issues that are at play right here. And there's a lot more, which we will talk about when we come back from the break. This is Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, a little wound up. Of course, we've been wound up because we've been doing well in football, right? We've been picking the winners. In the meantime, I want to urge you to check out myhighschoolinvesting.com. We're looking for help. We've been doing it for 6 years, and I've financed it myself personally. We've got about 300 high schools. We're looking to get a lot more. And if you want to help out, go to patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And just a little shout out to a few of you who have helped out and will be participating in the webinar and get an autographed copy of my book. Melanie, John, Wisconsin John, my buddy, and many others of you, and Todd. And so thanks so much. We appreciate it. In the meantime, don't forget to get the Bubba Show every day at 2 to 3 Eastern Time at libertytalk.fm. You can listen to the show live, or you can get the podcast. In the meantime, I'm going to step out here for a break, and I will be right back with more of Bubba's Bottom Line after the break. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. We're having a good old time. I'm a little wound up today. The blood pressure's a little high, but here we are. All right. So now we've got markets that are maybe getting ready to change over. You had Bitcoin, and Bitcoin was a big story all last week. It's now you've got the CME, you've got the CBOE. You've got the NASDAQ. Everybody now wants to get involved in the Bitcoin. And of course, every guy says, it's a bubble, it's a bubble, it's a bubble. Okay, it's a scam, it's a Ponzi. It may be all those things. But I can say one thing it is for sure. It is a legitimate asset class today. Now, would I be jumping in and buying at the prices it is now? No. Okay, why? Because I wouldn't jump into anything and buy it at that type of parabolic movement. It doesn't matter what it is. All right. The chart indicates that it might be a little bit frothy here. There might be a little bit of a sell-off. And of course, there was on, I think, Tuesday or Wednesday, $1,000 sell-off in about 20 minutes. Now, again, remember, the Bitcoin versus other asset classes is a true free market asset class. There is nobody in between it. All right? It trades 24 hours a day. You are not subject to anything there. So that is a true free market. And of course, they're a little bit thin. But we did see last week after Thanksgiving, 100,000 new accounts open up in Bitcoin. But I know that Kevin O'Leary from Shark Tank did an interview and said that Bitcoin was not a currency, and I will argue with that point right here. Bitcoin is a currency, just like a rock is a currency. Anything that you can trade with somebody else, something of value for something of your value, is a currency. It doesn't matter what it is. A currency is a method of payment. A currency is a method of exchanging wealth from one thing to the other. Okay, so let's not kid ourselves that Bitcoin is not a currency. Now, it may not be a currency years from now, but today I can buy things with it. I can go to overstock.com. Patrick Burns has been dealing with it for years. I can go to many stores and use Bitcoin. many of the offshore poker sites and other things, they will only take Bitcoin today. So what does that tell you? It is considered right now a legitimate currency. Is it in a bubble? Probably. It'll probably sell it back. I wouldn't be surprised to see it getting cut in half for a while. But the real question is will it last? And I believe the answer to that question is yes. I believe that the Bitcoin or some cryptocurrency will be a regular form of real currency. I think this is kind of a revolution that we are now seeing in the country, or people are getting away from the fiat currency, away from the Federal Reserve. I think a lot of the money that goes into gold has now gone into the Bitcoin. Right? Now, again, just in full disclosure, I thought it was a scam myself 7 or 8 years ago, and I've studied it hard, and I've been convinced that it's not necessarily a scam, that it's a real currency because people are trading it. So when people are trading it, it becomes a real currency. Now, again, will it explode? I don't have the answer to that. I would not be buying it here, but I certainly would look at it, and I'm certainly going to buy some of the other cryptocurrencies that are not quite, $10,000 or $11,000 or 12 or 9. So again, I would certainly play, but again, one thing you also want to remember is you never want to plunk all of your money into anything, any one thing. All right, you would take a percentage, and I know that already that family offices and advisors are putting their clients in some Bitcoin. That just gives it more credibility. Okay, that's again. But you take a small percentage so that if it does blow up, you don't lose everything. That's the whole key you have to remember. And I would tell you, I'd give you the same advice in gold. Okay, if I was going to construct a new portfolio today, I'd have, let's say, 5% gold, 5% silver, 5% cryptocurrencies, something of that nature, right? And that's what you should be looking at when you invest in these things. Now, gold has had a really rough week until Friday, actually going down to our bottom end support of 1270. But obviously got some help on the little bit of fear, and bonds got really perked up on Friday with that fear trade. In fact, at one time was up 2.5 points from the bottom. So again, but is it a concern? No, I think the bonds were a great selling opportunity. I think that the overall markets are a great selling opportunity. We just have to be a little more patient. Remember, the seasonality is a driver here. Okay, the markets are seasonal a little bit, and this is the time for the old Santa Claus rally. So I wouldn't be in a hurry to run and get short, and I'm never an advocate of dumping. I'm an advocate of hedging what I have so I don't have to worry about it. Okay, but gold did perk up a little bit, and it did held. That's the better thing to say. It held the footprint that we were waiting for. All right, it came down to that footprint, held, and rallied nicely off of there. So I think that's something that, and one thing we have to remember as investors and as traders, the reasons why are not important to us, okay? Very important to understand that. The reasons why we get bounces or sell-offs are not important. The point is that the footprint verified it and gave you that operation, okay? That's where you want to understand, not anything else, because the footprint of the market tells you where the money is going. And as you know from listening to the Bubba Show or being here, it's always about the money, okay? There's nothing else is important but where the money is flowing, okay? That's because that's going to direct the markets. Now, and you will see sometimes these will reverse, okay? And that is something that is something that we need to think about. Now, just a little bit back to Bitcoin for a minute. The White House said on Thursday, well, we're monitoring the Bitcoin situation. Well, what are they monitoring? Well, maybe they're monitoring because they want to figure out how to get their piece. One of the reasons that poker was outlawed in the United States of America, one of the reasons that it's hard to get legalized marijuana is because the Fed is trying, not the Fed, but the government is trying to figure out how to get their money out of it. They want to get the tax dollars. That's the whole key. Now, the Bitcoin, that's what they're looking at. That's what they're observing. I heard somebody say that that they ought to outlaw Bitcoin. Well, how do you think they're going to outlaw it? I mean, again, everybody thinks you could just say, okay, we're going to outlaw it, nobody's going to use it. Well, if you're leaving somewhere, if you're in China and you're trying to escape or get out, or whatever, and you've got a lot of money in gold, let's say, well, it's kind of hard to get that out across the border, right? But if you have Bitcoin or cryptocurrency, you can take it out in your phone. So there's a lot of things to think about here with all this. But at the end of the day, again, we said it's just a real currency, and let it trade, and just be careful. Again, I wouldn't put all my money into it, but just like I wouldn't put all my money in any one thing. So what we're really seeing here, though, is a market that's looking ready and ripe to turn. Now, we've got the new Fed chair, Powell, and of course, he spoke this week, and he didn't say anything. I mean, again, he's really just Janet Yellen in a suit and a tie. But I think that, when you look at the bigger picture, when you look at the market structure, we're a little bit frothy. I'm a believer in the market. Okay, I think the market goes up 8% year over year, 9% year over year. At the end of the day, it doesn't go up every year. Now I got to hear guys saying we're going to have another 21% rally next year. I mean, these are people out of their minds. All right, it's easy to call. It's easy. The old saying is it's easy to mistake brains with a bull market. All of the market doesn't go up, and most people just buy the market. So you're doing very well, and there's nothing wrong with that. But again, we don't stop. This is the human nature part of trading. Is people don't stop. They continue to buy and buy and buy and buy and don't think about it. They know that the market's never going down again, which is kind of what the markets felt like. And then, of course, you had a day like Friday where you had a lot of puking and panicking, and we'll see what that leads to. This is very similar to some of the major collapses in history. And again, I'm not predicting a collapse tomorrow. I would be very surprised if anything happened in 2017 now. I'd be very surprised if we don't get a Santa Claus rally, because we typically do. So again, I'm not telling you that to run out and chicken little and sell everything. I'm just saying that, hey, pay attention. Don't be so complacent. Don't go into hock. Don't go into debt here. Don't keep building that margin debt. Take some of that margin debt back. These are important things in trading that if you get over leveraged, and I just remind you of Bear Stearns and Lehman Brothers, you end up in the toilet. And that's not where we're looking to go. So as we look back at all the news of the week, what really drove the markets? Well, nothing really drove the markets until after the blow off top. Now, the blow off on Thursday, to me, we would call that price and time became irrelevant. The buyers had to get in. They didn't care anymore. And I think that might have been what you'd seen. And again, I'm not saying this now. I said it on Bubba's Daily Update on Thursday after the close. So again, this is not new. It's kind of where we are and what we think of the overall market. So at the end of the day, again, follow the footprints, be ready, be prepared, and don't try to don't have an opinion about the market, because when you try to opinionate yourself, you usually force yourself to be irrational. And irrational behavior, just like irrational exuberance, is never going to help you. We're going to step out here for one more break and come back with my commentary. This is Bubba's Bottom Line, Todd Bubba Horwitz, and of course, highschoolinvesting.com. Check it out. We want to help continue with our financial literacy. We'd like to get into 30,000 high schools. All you have to do is go to Patreon, patreon.com/Bubba Trading, and you can check it out. And of course, for those who meet certain qualifications, we're giving a special webinar as well as an autographed copy of my book. And again, I want to thank a few of you, Tony and my buddy Wisconsin John and Melanie from Switzerland and Warner. I appreciate you all. Thank you so much. And we're going to step out here for a break. And don't get the Bubba Show every day, 2 to 3 Eastern Time at LibertyTalk.fm. I'll be right back with Bubba's commentary after the break. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, it's my commentary. It's got to be my commentary, right? That's got to end the show. Not that I don't whine all the way through anyways, but all right. So here we are with a lousy tax plan. Now, if this tax plan debate, and if what's going on in Washington, D.C. doesn't convince you to drain this swamp, okay, then nothing ever will. This is the most ridiculous deal I've ever watched, okay? And we're waiting for, and I'm not going to name names, although I'd like to, but it doesn't matter left or right. These are the worst human beings to ever be involved in our economy. They're the same ones who have a slush fund for their sexual harassment lawsuits. They're the same ones that are grabbing our money and taxing us so they can do their thing and make more money. But this whole tax debate, okay, should be for everybody an eye-opener. Now, you can like or not like Donald Trump. That doesn't matter. The point is that the man is trying to get things done, and he is being forced to settle for a lesser plan than he would like to have for American people, okay, for the American middle class. And it's really not going to be a great plan for the average household, as they are telling you it is. Anytime you get a bunch of politicians laughing and smiling in front of the house or on the lawn, they're telling you that hey, we're going to stick it to you once again. But my real point here is that if we vote these people back in again, we should all have our heads examined. All right? Now, we are the controlling power. Okay, we are the masses, and it comes down to voting. And I don't care which side you vote on. Okay, I'm not I'm not worried about left or right. I'm not either myself. I'm a person who wants the best for America. I want the best for the economy. I want the best for my kids, as you do. But these people have no regard for you and me and for what is going on. We are wasting more time and more money on this plan, which is not even a good plan, yet we continue to have these problems. It's the same thing that happened with the health care program. It's the same thing that's going to happen with the debt ceiling debate. I think that's next week or the week after. Okay. It's the same thing that happens all the time. Now, if you don't think that's a problem, then okay, I can't convince you that it's a problem. But we have to change and either, at worst, set tighter term limits so that these people cannot continue to destroy the United States of America. Because our kids, our grandchildren are going to have one hell of a battle to fight off all this debt that has been created that nobody wants to address through this plan. I heard somebody say the other day, well, this year, you instead of spending $1, you spend 99 cents. And then next year you go to 96, and you keep dropping what you're spending, and that would cut the deficit. I have no problem with that. Why is it we can't get there? Why do they think they always need an increase in spending instead of a decrease? Again, I guarantee you that if we could get a legitimate audit of the government, that we would find trillions, well, maybe not trillions, billions of dollars that are wasted doing nothing. And it should show you with this ridiculous argument over the tax plan and who's going to vote yes, who's going to vote no. We need a good, solid tax plan that handles the debt in this country, that puts us back on a balanced budget like you and I have to live on. You know, we don't get the same priority that they get. If we're out of balance, if we're in bankruptcy court, we're in jail, okay? They should be in jail, but they're not. We have to, it's our job as Americans, as citizens of this great country, to make sure that we take care of it because nobody else is going to do it. And the only way we can take care of it is to vote our way through it. And so what I'm saying to you is that if you haven't learned by watching this whole disaster of the tax plan that goes on every day, and it's yes, it's no, then you haven't learned anything. I think this is something that we have to really learn from, because these people do not have our best interest at heart. These people are not worthy of our vote, which is why we need to get term limits in place. So when you get somebody who isn't doing the job, we can get rid of them either by voting them out or by term limits. And we need to get a system that redoes the American setup of the economy, okay? Which means that we need to go in and do an actual audit of everything to see what we're spending on that we don't need to spend on. Because all of these things, I assure you, could be found within the budget and where we could cut a lot of this. And then we could get a legitimate tax plan that would make it fair for small business to compete with big business. Because small business is the number one employer, okay? Small business is the ones who pay. They pay better money. But they're eliminating the small business just by watching what Amazon is doing. And again, I don't have anything wrong with Amazon, free market system, but they're putting out every business out of play, all the small guys. All the small guys get cheated all the time. And that's where we need to make the adjustments. And that's where I think the problems come into. And again, the tax plan, to me, it's no big deal. I don't like it anyways. I think it's a bad deal. I think it's another thing we're settling for as Americans. And I think it's a mistake. That'll do it for today. This is Bubba's Bottom Line, Todd Bubba Horwitz. And as always, I thank you so much for being a part of it. It's always great to be with you. Everybody have a great week, and we'll see you next week here on Bubba's Bottom Line, and we'll see you on the daily updates every day. Have a great day, everybody. Thanks.